GM. Tuesday, 16th of Jan. GM, everyone. I'm going to look at daily levels, look into the market where we're at now, where I think we're going. So, basically, this is what I expect to see across a lot of the market over the next however long. Probably longer than people think. So, if I had to guess, I would say 8 or 10 weeks. And what it just means is, I don't know if it's going to move like this, if it's going to move in different shapes, if it's going to go up, down. But what I'm expecting is lower and lower volatility on centralized exchanges. So when the run has ended, we tend to get into a period where it's impossible, essentially, to trade. So if you imagine that we've had our run up, and most coins have had their first sell-off, and they're probably somewhere like here, or here, or here. What's probably going to happen is each bounce is weaker and weaker and weaker, and many of them probably don't even make clean new lows. Some of them will. The weaker alts will actually go lower and then start to range around at the lows. But if it's something like Bitcoin, I would expect Bitcoin to do something like that. If it's an altcoin, it might not be as strong, and it might go down like this and then into low volatility. Whatever way it goes, I think it's just going to be more difficult to trade stuff on centralized exchanges. So I talked about this last night in trading analysis. This part here about hard mode coming for centralized exchange alts. And I look back to Bitcoin in 2020, right? Something like that. I just see a lot of parallels with it because it's more so about time than anything. And the market, first of all, it needs time to cool off. Every market does. It can't go up only forever. And Bitcoin has obviously had its first big sell-off. But I'm not bearish BTC in the short term. I actually think from here, the most likely move is up into that gap above. And I wouldn't be surprised if because we're consolidating below the 200 here. And so very common that after you lose, so this is the first time Bitcoin has really lost its 200 EMA trend on the 4 hour, as you can see, right? First time it's actually lost it and traded below it. We got a wick below it a couple of weeks ago, but this is the first time it's spent time trading below it. Now a lot of people will have triggered to sell on that. They would have de-risked, they sold, they shorted, whatever. So after chopping around there, it's quite likely that we pop back up above it, but that it leads to a lower high, because trading down below this and the consolidation that led after and losing that 4 hour EMA trend is a sign of weakness. That is a sign of trend weakness. So I think it's quite likely that we do bounce, but that we bounce into a lower high. Something similar has been done a couple of times where there was one here where we didn't lose it fully. We sort of chopped around it, but broadly stayed above it, and we made a slight new high. There's another one here where we did lose the 200 and it bounced into a lower high. That's more of what I'm expecting. And I mean, you could overlay this, just even this as a sort of one potential scenario for BTC. It's obviously not going to look like this because fractals never play out identically twice. But the point is to visualize how lower volatility can look. So there's where you lose the 200, you pop back up, it gets people excited again, it gets sold into, it sells off, it goes sideways, a little bounce up, again a weaker bounce, it sells off, it sells off, it sells off, and it's time more than anything, and this takes us into March, right? And people really start to get, like, just think, people are going to be extremely pessimistic if price moves like this. Because if stuff nukes and just goes straight down, that's volatility. So that's great for traders. You have to remember that even though most people want the bull market to go up only, traders just want the market to move. And I think what's more likely than a big crash is just lowering volatility, lack of interest. People leave, they go and do other things for a while, they check out, they sort of give up. And that's how it leads down to this. And if there is lower volatility, if there's not strong selling, if there isn't active buying, if there's just kind of a balance where this buying and selling sort of cancel each other out, then I wouldn't be surprised at all to see this. And if you do get this lower volatility and we kind of grind down into 40k, it's super unlikely that 40k breaks. Something like this would make so much sense to me, that we sort of just grind into it. Everything gets bearish. It dips down below it, and then boom, that's it. Away we go. Whenever it's ready to go for the next run, probably maybe leading into the halving, who knows, I don't know. So there's no real way for me to predict this and say this is going to happen. I think you all know that by now. But the less that happens, the more likely this becomes. So the longer it takes for price to have another big breakdown, the weaker the bounces and the more choppy the price action, the more likely this becomes. If it's truly weak, and if it's going to lose 40k and it's going to trend down towards 30k, it's going to do it much sooner and more impulsively. Meaning, it probably has a bigger move up here, right? Moves up, gets people excited, but it's distribution. And then as it falls off, it will rip down through it. And then it'll go into yet another sideways phase, and then down again, and then it'll reach its low, and that's where the low volatility will come in. Okay, that's totally possible. That can happen. I don't think that's going to happen unless something major changes with the liquidity picture, with the Fed, with the US government, with their fiscal deficit and printing money essentially. So unless something like that starts to happen, I think Bitcoin is at a pretty fair value around here for short term. We had a big run up, yes, but a lot of that is just recovering lost ground from the previous bull market. So we're certainly not overbought, right? Prices are not expensive, if you want to use that term. Prices are not expensive on the high time frame. Prices are just in a good area, right? I don't think anybody is rushing out to dump all their Bitcoin because it hit 48k, right? They're not going to dump their cycle bags, are they? No. And so, yeah, in the short term, we had a really strong, relatively fast move from the high 20s all the way up to the high 40s. And so price needs to take a bit of time, cool off, go sideways. But because people aren't dumping their cycle bags, you're not going to see heavy spot selling here. We're going to see some of that ETF selling, which probably mostly happened in the first couple of days. A lot of people are now fearful that the ETFs are going to keep being net selling pressure and net outflows, but that doesn't make sense. If you think of it like a whale who is holding GBTC or who wanted to sell the news, you know for sure the highest volume, the most liquid are always going to be the first couple of days. Thursday, Friday, those were the biggest days. The reason they're the biggest days is because that's when the peak hype, peak euphoria, for the ETF bulls, peak of everything. It's got all over the news. Jim Cramer's talking about it, fucking Bloomberg's talking about it, everyone's talking about it. And if you wanted to sell, you would sell Thursday, Friday, because that's when the liquidity is there. That's when there's billions being traded in the ETFs, and you can get out. Every day that passes now, there's going to be less and less buying from the ETFs. And people are talking about, I see some fucking completely retarded takes, to be perfectly honest, on Twitter, where a guy is it's just fucking hilarious. So I saw one guy, a Bitcoin maxi, and I love Bitcoin, but these guys are just deluded. And he's like doing the most one-sided, shallow logic, where he's saying that because there basically was about 20,000 BTC, I believe, that was traded in each day, something like that, right? In terms of how many Bitcoin were actually bought. And so you know that like BlackRock have I think they've 500,000 or 500 million, 500 million divided by 40, let's call it 45. So BlackRock, each day there was that. So BlackRock of about 20,000 BTC now in their inflows into their ETF. Okay. Plus the others, there's probably a total of about 25,000 because GBTC, there was a bit of outflows. But net across all 11 ETFs, or 10, one of them didn't actually go live, 10, let's say you've got 20,000, 25,000 in the first couple of days. So let's call it an average of 12,000 per day. Well, what this guy's doing is extrapolating that out just for the next 6 months, as if there's going to be 10,000 of net inflows every day for the next 6 months. And it's just the most dumb logic. Volume is not a constant. The volume is always going to be highest. The activity is going to be highest at the beginning and it's going to taper off. If you think that there's going to be 500 million of new inflows into ETFs